So welcome to another trading recap video. So I'm going to be sharing a recap on one of my base trade I took for this year 2026, right? And the trade is on GU and it was a sell trade, right? So it was on the 21st of July 2026, and when we start from, so it was on a Tuesday, right? So when we start from the weekly time frame coming into that week, right? We can see that the previous week price took out a relevant level here and then closed back inside this candle, right? And then when you go to EU, same week, you can see EU was taking out a relevant level while also trading into an internal key level as well, which is the fair value gap on the weekly time frame. While on GU, we were trading to a relevant high. Okay, so now ideally EU was weaker, but we were in a consolidation, so we needed something that had significant displacement to be able to put ourselves on side with the market. So we go to GU. GU was obviously expanding high, and so we expect that there is much volatility in this particular asset. Coming into this week, I marked out EQ of this week to frame my short setup. So I'm expecting that if price wants to, because this is consolidation, expansion, reversal, right? Now we traded into a key level. We should reverse from this key level, right? So expansion met with expansion is a reversal signature, right? So now if we are to open, we can cap off this retracement on the daily. So we can cap off this retracement here at this invalidation point, right? So Monday, we open here. On Monday, we opened high first into a relevant level here. So we took our previous day high. Now, if you take, this is the Forex chart. If you take the futures chart on GU, you'd see that we took out a relevant level. So let's open that. Cool. Now, this is the futures chart. So you can clearly see that we took out this relevant high, which was the Friday high, and then we closed back inside this candle's range, which obviously the next day our bias is one-sided, right? So we'll be expecting that price should remain below 50% of this candle, right? Of this week. Price should remain below 50% of this week. So this becomes our new invalidation point coming into the next day, right? So when we go to the 4 hours, you can clearly see our universal model on the 4 hour. So we are trading internal to external here. And then this is our draw, right? Obviously. So on Tuesday, price opened high first. So we opened high first on Tuesday into this key level, sweeping out this high. Now, interestingly, when we pull up EU on the same day, which was on the 21st, right? Cool. You can see that we are creating a higher high here. So we are creating this candle's high. So this is the same universal sequence, right? Here and here, right? Same universal sequence, right? And when we bring GU, you can see GU, we are having a lower high here. And EU, inside the gap, we are having a higher high here, right? So clearly, GU is weaker for the day because it failed to take out this high. So now this is our first stage, this SMT. So we had the first stage, and if you pull up EU as at the same time, this is at 3 a.m. and this is 3 a.m., right? So GU at 3 a.m. is closing bearish, EU at 3 a.m. is closing bullish, right? So this SMT is our first stage, then this candle closure becomes our second stage, right? Cracking correlation. So this is the first stage cracking correlation, and this candle close is the second stage cracking correlation. So this crack is confirming this SMT as the high of the day. So if price expands away from this high, it shouldn't trade back to this high. So this candle is our precision swing point. So we are on the hourly. So we now look for a gap, right? So we can drop to the M15. So I use the M15 gap. I think there's a gap on M30 as well, right? Yes, I use this. All right, so on M30, as we expand away, there's a gap here. And so we can frame our trade away from this key level, right? So now this is the M30. The moment we see this that is paired with the precision swing point here, and then price expands away, the next thing we are doing is to look for our universal model on the lower time frames, right, which is the M30. So we are trading from this internal to this external lows here, right? Now, when you from M30, you drop to the M3. All right, cool. This was the first CISD. And then price retraced into this gap, and then we have the confirmation entry here. Right. So this was my trade, short from here, stop above this high, all the way down to this levels, right? So M3 for our execution time frame, first CISD, second CISD, market execution after this candle closure, right? For 6 hours. So thank you guys for following along, and I'll catch you in the next one. Bye.